How many shares does your company repurchase every year to offset the dilution created by its equity programs? Did you know that your company could be subject to an excise tax on the value of all of those repurchases? In this video, I'm going to provide a summary of how this tax works. So what exactly is the excise tax? Well, it's simply just a 1% tax on the value of any shares a public company repurchases during the year. So let's say that your company repurchases $5 million worth of stock. Just take that $5 million times 1% and your excise tax would be $50,000. An important aspect of the excise tax, however, is what the IRS refers to as the netting rule. Under this rule, the value of repurchases that are subject to the excise tax are reduced by the value of any shares that are issued during the year. So let's say in my example, in addition to repurchasing $5 million worth of stock, your company issued $1 million worth of stock. Well, that $1 million worth of issuances would reduce the value subject to tax. So you would only be subject to tax on $4 million worth of repurchases, and that would reduce your excise tax to $40,000. And I have some great news here, because any shares that your company issues under its equity compensation programs count for purposes of the netting rule. So what does that exactly mean? Well, it means that any shares that are issued for option exercises, RSU vesting events, performance awards that vest, really any type of equity award, are going to reduce the value of repurchases that are subject to tax during the year. And that includes any shares that employees sell that are used to pay their taxes on those transactions or to pay their exercise price. It also includes any shares issued through your employee stock purchase plan. So what doesn't it include? Well, it doesn't include shares that are withheld for taxes. Those aren't considered issued under the netting rule. And ditto for shares that are withheld to pay the exercise price on net or SAR exercises. But even with those exclusions, the number of shares that you issue through your equity programs could be a very significant offset to the value of your repurchases for purposes of this tax. In fact, for many of you, these shares may be your most significant offset under the netting rule. So now that you know that, you probably have some more questions like, are there any exceptions? And when are shares considered issued for purposes of this rule? And how do I determine the value of shares repurchased and shares issued? Well, guess what? We've got some answers. In our show notes, we'll include a link to my blog entry that provides more information on how this rule works, including answers to those questions and more. And my blog entry also links to the IRS guidance on the excise tax. I hope you enjoyed my video. If you did, please subscribe to our YouTube channel. That way you're notified when we post new videos, and it really helps us out too. Win-win. Thanks for watching.